I think it's safe to say that for a lot of YouTubers, being on a trending page is the ultimate goal. And I'm sure businesses feel the same way about trending because that usually means there's more eyeballs and attention, which leads to more revenue. But you probably don't want to be trending for the wrong reason, and right now, Nikola is trending on CNBC, but all for the wrong reasons. If you missed this incredible slow crash of a disaster, get it? Slow crash? Because Nikola, they make electric cars. Anyway, Nikola's founder and executive chairman Trevor Milton, he resigned following the massive blowout after the release of the Hindenburg research report that basically called Nikola out to be a massive fraud and that they lied about their underlying electric and hydrogen technologies. And since there's countless news articles and YouTube videos outlining the whole Nikola drama, I won't get into the specifics here, but with everything that's come out, you might think that Nikola's stock would be on a nosedive. I mean, sure, if you look at their chart, it has gone down substantially from their high back in June 9th, but the stock is only down 16% from when it IPO'd back in June 4th. Which tells me that a lot of people are still holding on to their Nikola shares, and maybe even buying more into it. Robintrack, which tracks the number of users that's holding a particular stock on Robinhood, hasn't been updated since it shut down back in August, but look at the number of Robinhood users is holding Nikola stock. Over 200,000 users are holding, and I'm sure a lot of people are still holding it too, thinking that this whole controversy is going to blow out and the stock is going to rebound, or people are going to be buying into it thinking it's going to be a turnaround play. But the whole issue is that people are getting mixed messages, so of course people who don't do their own research before investing will follow whatever stock is currently trending. And articles like this just adds to the confusion. I think for a lot of people, seeing that GM invested into Nikola days before the whole report came out, it validated Nikola's stock for a lot of them and got them thinking, hey, if GM has done his due diligence and is investing, then I better get in before it goes up. And that's the problem with people following the news and following the trades done by companies and famous investors, because you never know why someone invests and at what price point and when they're going to sell out. And so once again, and I'm pretty much saying this at every video, don't buy into a stock just because everyone else is. Hell, don't invest in Apple, Amazon, Boeing, Alibaba, Bank of America, the Clorox Company, Costco, Disney, Dunkin', Facebook, Alphabet, Johnson & Johnson, JP Morgan Chase, MasterCard, McDonald's, Microsoft, Otis Worldwide, Procter & Gamble, PayPal, Ferrari, Tesla, Uber, Visa, Wendy's, and Waste Management just because I own them. Do your own due diligence first before investing. And to wrap things out, it really is a shame that Nikola hasn't been able to live up to his promises and is caught up in this whole mess of a scandal because it's a terrible PR for them and I'm not sure if they're going to recover. If anything, GM might, back away from the deal, or it might just choose to absorb and retire or rebrand the Nikola brand entirely just to get this whole stigma and this whole messy issue out of the way. But we'll see how things turn out. But the sad thing is, competition is good in any space, and I hope more EV manufacturers they gain traction, so it forces Tesla and others to continue to innovate and provide more choices for the customers. But all this bad news got me itching for something happier, so let's jump into my portfolio because I think it's going to be a good day. Never mind. My portfolio is unfortunately down almost $900 since my last video, but like I said before, it's fine. Totally fine, because I've been buying more as the stock market has been going down. And several reasons why the stock market is going down again. The first is Europe is seeing a resurgence in coronavirus cases. The United Kingdom is considering another lockdown, so a lot of retail and these turnaround travel plays, they're being beaten down as well. And following the death of Supreme Court Justice Ruth Bader Ginsburg on Friday, Congress' attention is now shifted towards filling that vacant seat. And Republicans, they want to nominate someone now, while the Democrats, they want to wait until after the election. And I mean, after seeing them bickering for months about the next stimulus bill, who knew politicians could be so quick and eager to push things to Congress, Meanwhile, our famous money printer, Federal Chairman Jerome Powell, is saying that the economy needs more stimulus to continue its recovery. And let's not forget the millions of people who are still struggling because there's no stimulus check and no extended unemployment benefits. But, priorities, right? Gotta fill that seat. And with only a few weeks left until the election, things are going to get crazier and more volatile with the stock market. So make sure you prepare your portfolios accordingly. As for me, I got my cash on the sideline ready to deploy, and I actually bought almost $500 of stock since this new dip we're going through, and if it continues to go down, I'm going to make sure to take advantage of this crazy volatile market. And since we're looking at this chart, I'm actually thinking of redoing it to show monthly differences instead of comparing the results from my previous video. I think that's going to yield more uniform results and it's going to show the progression better. So when I do make those changes, I'll make sure to do an update video to show off everything that I figured out. So make sure you subscribe for that. So yeah, there's been a lot of craziness, but do you want to know what's the most upsetting news I've heard since this whole pandemic started? It's this one. I mean, like, seriously, 2020 is officially the worst and it needs to end quickly. But at least we have other delivery services to keep us fed and sugar high. And by the way, I only found out about this recently, but did you know Pepsi delivers snacks? Yeah, it's crazy. But go to snacks.com and you can order from all the Frito-Lay brands and it's free shipping on orders over $15. I mean, I recently sold out of my Pepsi position, but I think I might have to seriously reconsider. I mean, look at all these snacks today I have. You know I love me some Cheetos and Doritos, but some of these snacks I haven't even heard of and a lot of crazy flavors that I'm pretty sure I need to try. And yeah, it's a crazy time to be alive, so definitely head over to snacks.com and get snacking. That sounded like an ad, but don't worry, I'm just spreading the word, making sure everyone has their snacks during this whole pandemic. But the last piece of news I want to cover for today is regarding the Snowflake's IPO. Snowflake is, I'm not entirely sure what the company does, but it is a software cloud company. When Snowflake did IPO'd on September 16, it basically doubled in price, going from $120 the day before and closed at $254. But here's the crazy part though. Snowflake was initially set to debut the shares between $75 and $85, but then the company upped this share price to $100 and $110. And according to this article, when it was published, Snowflake is now worth almost $68 billion, which is more than 5 times its $12.4 billion valuation back in February. So the question becomes, what caused this price up in regards to Snowflake's IPO? And part of the answer lies with what happened prior to the IPO, because on September 8th, it was actually revealed that both Berkshire Hathaway and Salesforce would each buy $250 million worth of stocks in a private placement immediately after the market debut. Naturally, having a massive name like Warren Buffett attached to your company is going to increase the demand for investors looking to follow the Oracle of Omaha. But sorry to burst anyone's bubble, it's probably not Warren Buffett who is buying Snowflake. It's most likely one of Berkshire's portfolio managers, Todd Combs or Ted Weschler, as they both have Warren Buffett's blessing and are free to invest $14 billion each as they see fit. But because of the news headlines such as these putting Warren Buffett's name into the Snowflake IPO, retail investors who don't know any better, they just think, oh, if Warren Buffett is investing into Snowflake, I better buy it too when it IPOs. And this is how you end up with this situation, a stock that shoots up more than 100% in a day. On one side, yes, it shows a massive excitement and demand for Snowflake, but, and this is a big but, if you look at it another way, it means Snowflake's original IPO price of $75 to $85, it was terribly mispriced. The CNBC article breaks down this argument, and I'm going to do my best to explain it better. For simplicity's sake, let's focus on 3 numbers. $120, which was Snowflake's revised IPO price, $253.93, which is the price that Snowflake closed on its first day of trading, and $28 million, which is the number of shares that Snowflake is selling through its IPO. And while it's of course impossible to predict the demand of any IPO, by lowballing themselves, Snowflake missed out on $133.93 per share, or a total of $3.75 billion. And sure, Snowflake, they made $4 billion through this whole IPO process, but ask yourself, wouldn't you rather have the extra $3.75 billion to do whatever you saw fit with your business? And this is the biggest criticism of the traditional IPO process. The companies are leaving money on the table by not pricing what the market values them upon trading. This is why we've seen more companies choosing other methods like SPAC or special purpose acquisition companies and direct listing to go public. While Snowflake, they did get some extra capital when they adjusted their IPO price from $75 and $85 to $120. The people that really benefited from Snowflake's IPO were those who got in on the pre-public price of $120. Of course, the people that benefited the most were all those early investors who invested in Snowflake. Like this guy, whose total investment of less than $200 million is now worth $12.6 billion. So this all begs the question, what could Snowflake have done differently? And it really depends, and it is once again all a balancing act. If Snowflake were able to predict their shares going to trade nearly double their $120 IPO price, they would have priced it closer to $200 to make sure they don't leave any billions of dollars on the table. But the headlines might have been less than spectacular. I mean, saying your stock went up 100% the first day is much cooler than saying it went up only 25%. But it's important to consider the opposite. Imagine what if Snowflake tanked on its first day when it IPO'd. Instead of closing at almost $254, it instead closed at $150. If that was the case, having a lower IPO price of $120 is much better. This happens all the time. Just look at Facebook. It IPO'd at $38, but it fell as low as $31 after the opening bell. And like the headline reads, that's 18% below their $38 IPO price. The whole reason a company decides to go public is to raise money and to gain market value to, get more capital. And having your share price go below the IPO price is bad publicity and it's basically a death sentence, at least for the short term. Not just Facebook that goes through this process or have experienced it. Countless other companies experience the dreaded headline of trading below the IPO price. For example, we have Lyft, we have Patif Evergreen, we have GoPro, we have Snap, we have Square, and we have Alibaba, and many, many more. So the question I want to ask you is this: what can we learn through this Snowflake's IPO process? And the answer lies in one of the best investment books I've ever read, which is also my daughter's favorite book at this time. And it's called Duck and Goose, It's Time for Christmas. And in it, Duck tells Goose something that I think all investors who are looking into IPOs, they should hear right now. And Duck says to Goose, "Goose, it is not time for catching snowflakes." And truer words have not been spoken. When you read headlines like this, it's very tempting to chase after the hot IPO stock or the next stock that's trending. I mean, even Warren Buffett is investing in Snowflake, right? But like we've explored in today's video, make sure to do your research before you invest in any stock, especially when it comes to IPO stocks that hasn't been tested yet, or you might end up investing in Facebook when it goes down 18% right on IPO day. Sadly, we can't buy into Snowflakes or other private companies at $120 and their pre-IPO price, unless we have a few $1 million laying around. Instead, we'll be out here, just looking at their current price today of $217.39 and wondering if this is still a good buy or not. But hey, that's all the financial shenanigans I have for you today. But if you enjoyed this video, don't forget to like and subscribe. It's free, and don't worry, I promise I won't charge you $120. And as always, if you want to get started on your investing journey, use my referral links to M1 Finance in the description to get your free $10 when you sign up and fund your free account. You can also get 2 free stocks when you open and fund your free Webull account $100. And finally, Robinhood is going to hook you up with another free stock when you sign up as well. Thank you so much for stopping by. Happy investing, and as always, I'll catch you next time with more shenanigans.